Welcome back to LST 101. On this chart, we have the weekly chart of what looks like a market crash. Each bar represents 1 week worth of trading activity. And the question we're going to explore today is, what is the buy and hold investor to do here? We have investors like Warren Buffett. Just his strategy, buy and hold. What is he doing at this time? Is it working? And what are you to do? So, as you may know, some of our earlier subscribers know that we have some videos on Warren Buffett. So this one, for example, follow Warren Buffett's buy the S&P 500 index and Warren Buffett's best investment advice. If you haven't seen those, I encourage you to check those out. But here today, given that the market looks like this, and if we jump over to the daily chart, so this is weekly. If we jump over to daily, we zoom in a little bit, you'll see that a lot of this activity just happened in December, the month of December. Now, if you look at some of the articles relating to Buffett, well, he actually recently purchased close to $1 billion of his own stock. And this is posted at the beginning of December, and how he talks about intrinsic value, and he was he was not only buying stock in his own company, but there's buybacks across the corporate sector reaching records. And earlier he also bought in the summer, bought $4 billion of JP Morgan. This is a stock that he always wanted to get into but never got a chance to. And then he finally bought into $4 billion worth of Apple, of JP Morgan. And I think there were some reports saying that he added to his Apple position right here. So let's see. There, I just googled it. Buffett just made more than $2 billion in Apple. And then on August 30th, saying that he bought more Apple. And you look at this chart. I mean, Apple is mostly in the Nasdaq, also a component of the S&P. But if you go to the weekly chart, you go back to that August summer time frame when he was buying, JP Morgan and Apple. That's up here. So the question is, did he buy JP Morgan on a dip, or do you think he actually chased that stock? I mean, let's take a look at JP Morgan. All right, so here's a chart of JP Morgan, and this is 2018 August, and we don't know the exact date that he bought, but like it's generally in this time frame. I did see an article about him buying it in November. In any case, assuming he hasn't sold, this is basically what happened shortly afterwards. So is this buy and hold strategy? And if it's all about intrinsic value, and he bought JP Morgan up here in the 107 to 115 range, and that's value, then what do we do down here? Is this even a better buy, or was he wrong once for something that he's always been right in for a lot of things? Yeah, these are questions that are worth kind of exploring. And we'll also take a look at some clues that we saw in here that would have predicted it. And this past week's fall, if you looked at this our most recent video 1 week ago, we were just talking about a potential crash, and in that video it looked like this. And as you can see, just since that time, this 2636 region is now 2421. So when we were up here, when that video was posted, we're actually way down here now. So what are the signs that we could have seen for this to happen, and does that make this a buying opportunity? So to dive in, let's take a look at some of those last week's post. We were saying 2630 broke, and it had some level of significance. At the time, the monthly chart looked like this. The daily chart looked like this. And we were just breaking this trend, and the prediction I had was based on this theoretical diagram, right? So this AB1, and then this wave 2 is a zigzag, ABC zigzag and then a potential three down, and that's what I've been kind of tracking. I've been studying these kind of market tops and figuring out how do they form, and it looks like this we have an AB 1, 2, 3, 4, 5, and then so that forms this wave. It doesn't always have to match this, but it does form a potential wave one down. So let's say this wave one here corresponds with this wave one down here, and then we have a rally here, and then drop down, and then rally again. So that's basically this ABC wave two, and then what follows next is the wave three down. And if you look at right, so if you look at this chart, I have it labeled wave AB 1, 2, 3, 4, 5, and that makes a wave one, right? So this wave one corresponds. Let's look at this diagram with right here, and then the wave two is this kind of A, B, C wave two, where it's kind of hitting against this 2815 region, and this base 2630 is kind of forming. Now it looks like we kind of dipped below it by a good amount, but then we retraced right back to the midpoint of this ABC wave two structure. But if you zoom out, it actually looks just like the diagram, right? So that chart that weekly chart looks just like this theoretical diagram, at least so far. Right? So you have this wave one down, and followed by wave two, A, B, C wave two, and then the three, it wasn't the immediate second red candle here, but it happened on the third one. So this so far follows the theoretical diagram, pretty much by the weekly turn. It's also why in the last two posts for this thumbnail image, I posted this wave one down followed by an ABC wave two, and then a question if the third wave will follow. It must follow through, and that's you match this diagram with what you see here, and in a way you could argue that it's textbook. This setup doesn't always follow through, and that's why that second week I wasn't sure if it was following through, because it looked like it was bouncing, right? So if you look at that wave two, this second, I'll zoom in here. So right, that first week it looked like we were on our way down, right, at 2590, but then it bounced up from 2590 all the way to 2670. Now, is this pattern still valid? Well, it turns out it actually is still valid, because if you zoom in, what ended up happening was there was news about the China cutting auto tariffs, right? So that was around this December 11, 12 mark, right? So if you Google that term, right, you Google China cuts auto tariffs, you get all these December 14th, December 11th, December 12th, and saying, oh, China cutting U.S. car tariffs. President of the United States did it, December 12th. So a lot of optimism that, after the November 30th dinner with President Xi and Trump, that things were actually on track, and China's actually making steps to actually, reduce trade war issues. But that was at the height of sentiment, right? So that caused this ABC wave two bounce, and prior to that, you see that December 30th was right here. After the dinner, things were all rosy, but then right when the market opened that following Monday, the markets did not follow through, and instead they reversed. And so that was kind of like an optimal area to get out. This area, when China cuts auto tariffs and everything seemed perfect, was also an area to come out, except that following night they said China was reporting slower growth. And then, there's also positive news that Huawei was, the CFO was released on bail. And so, people thought, there was an issues with her arrest, and things are going to go bad. Well, there's two positive signs: China cuts auto tariffs, and this Huawei CFO gets released, and that coincides with the positive sentiment. But of course, once they report slower growth, then it kind of goes down and into the Fed decision, right? And then there's optimism that the Fed might actually save the market, give a Christmas rally, but then that doesn't happen, and then we are here where we are now. So that's effectively, if you put the news on the chart. Now, I don't say the news dictates or necessarily moves the market all the time, but it's just good to keep track of where some of these key items are. So we had that G20 summit end of November. We had that Bush funeral that was that Wednesday afterwards, and then China cutting auto tariffs, the Huawei release, the GDP, China slowing growth, and then the Fed decision of raising interest rates, and of course now we have, I should add, the government's shutdown that's making the headlines. So that's effectively the news that basically brought us, from these 2,700 levels down to 2,400. Following this, in a way, textbook kind of diagram that I've been laying out for quite some time. Now, one of the reasons that may have made me cautious about, the downside is it's very difficult to have full confidence when Warren Buffett is buying, right? November 14th, he's buying JP Morgan shares, right? You look at November 14th, what was happening, November 14th? That's, that's in the middle of this ABC pattern, right? So November 14th, that's around here. So that's just right smack in the middle, right? And we're leading into the G20 summit, and it's basically right before Thanksgiving, and so he's buying JP Morgan. So if he's buying JP Morgan, well, JP Morgan is one of the key bank stocks, and if he thinks that's undervalued, that means it's very likely that means he thinks the S&P 500 is undervalued, which in turn means that it's probably not a good idea to go all in on a short. So there are definitely signs that make it difficult to short on with full confidence when someone like a Warren Buffett comes out and says he's buying, unless he could be wrong. I mean, he's been right so many times in the past, like during the 2009 crisis, he bought Goldman Sachs, and that had, and Bank of America, and that was a huge payoff for him. But he always regrets that not buying JP Morgan, and then to buy it now at this time, really. But it is what it is. He bought Berkshire Hathaway, he bought JP Morgan, he added to his Apple shares, and you look at Apple, not doing great either. So here's a chart of Apple, and if he added to his Apple position in the summertime, well, the summertime could be here, it could be here, but now it's down here. So if Warren Buffett bought at these levels, does it make sense to buy at these levels? It's that's a hard question to answer. I believe we should be seeing some kind of bounce, but whether we're gonna approach all-time highs in the next 6 months, that's hard to say. That said, if we were to follow this diagram, we have to guess kind of where is the bottom of this three. Now, some of these charts, I have, for example, on this one, I have, ahead of time, this green line at 24.54, right? So some of these charts I have ahead of time, this one, that's 24.54. The next level below that is 23.55. So around 23.50, 24.50. You look at where we're at now. We are at 24.20. So just below the 24.50, and actually the 24.50 level did see a bounce. So this 24.50 right here, we did see a bounce, but then it just went right through it again. So I'm expecting some kind of bounce to fail. But if you zoom out and you have that 1, 2, 3, 4, 5 pattern, right? So we have 1, 2, 3. The question is, where will 3 finish? My guess is that 23.50 mark that I have on that chart might actually come into play. We could get a bounce. I would say let's zoom in. All right, I'll provide a specific level. My guess is 2465. I think we're going to touch 2465 and then come back down, um, and touch 2350. That's my best guess. And then from there, we're probably going to get a rally. But either way, if you believe in the buy and hold strategy, it may make sense to buy here for the longer term. Obviously, it's very difficult to buy when there's blood in the streets, but at the same time, if you look at the monthly chart, and there's if there's really global growth slowdown, we have a 1, 2, 3, 4, 5 pattern here, and the question is how far will this go? I see this potentially even retesting where the 2016 election rally started. I think that's not out of the question, right? I think we might get very close to it. This 2200 level. I think that's very possible, or maybe even the beginning of 2016. This just below 2000 area. I think there's a lot of support in this area, especially because we spent a lot of time in 2015 in this region. This is an area I would definitely be buying. Right here, hard to say. I'd say it's probably best to wait it out. We still got a lot of gyrations to probably happen here before any meaningful kind of low is going to happen. But that's basically where we are. We're basically in the worst December since whatever year that you could see headlines on, and we're actually negative for the year. So on across all indices, so you look at the Nasdaq, which actually made a high when other indices were not really. This one made a high very early on, and still it pulled back to now below the February lows. And Russell was small caps tend to have be where the risk is, and that's already retraced in a way. Well, actually, we retraced all of 2017's gains as well. That's pretty amazing. We're just seeing right here, and of course the Dow, somewhat in line with the S&P. The Dow showing some signs of weakness, but it's got a long ways to go to get back to the 2016 elections. But it has retraced all of the 2018 gains so far. So that's where we stand in the markets. And what do you think? What do you think about Warren Buffett's buy and hold strategy? Do you think it's for the long haul? And if that strategy is legit, do you think it's legit in this environment and you can buy and hold? I'll leave that for you guys to answer in the comments. For now, that's the update for this holiday, December 25th, near December 25th of 2018. And I'll see you guys next time.